Hey everyone, and welcome back to another episode of Leaders in Lending. I'm your host, Drew Megrey, joined today by Bill Clancy, the Vice President of Consumer Lending at Advia Credit Union, roughly $3.5 billion asset size credit union based in Kalamazoo, Michigan. Bill, welcome to the podcast, and thanks for making the time to join me today.
Yeah, certainly, Drew. Appreciate the invite.
So, Bill, to kick things off, I always love to start the podcast with the how did you get there type of question. Because everyone's path into financial services, of course, is a little bit different. So can you tell us, one, what first drew you into the financial services space? And then on top of that, what did the journey look like as you kind of progressed into your role today at Advia?
Sure thing. So a little bit of an interesting story. I've watched some of the prior Leaders in Lending podcasts, and it seems like a lot of folks kind of backed into our industry or their role, and that's not the case for me. So growing up, I had parents that were in sales and marketing. And so I always envisioned myself going into business. And I was also a very curious kid that liked to read a lot because I wanted to know how things fit together. So I would read the Wall Street Journal. I would read Consumer Reports. And you're talking about like being a 10 or 12-year-old, right? So I think the business track was always my path. So went to college, studied finance and economics, and upon graduation, got into consumer lending. And 25 plus years later, it's been a mix of retail delivery and consumer lending. I've always worked with community financial institutions, either large credit unions or medium-sized community banks. And I've been with Advia now for the last 2 years in this role as Vice President of Consumer Lending, which for us represents indirect, direct, fintech partnerships, and the whole gamut of consumer lending products: HELOC, credit card, personal loans, auto loans, etc.
Awesome. Well, thanks for that. And yes, you're right that the majority of our guests wanted to be doctors, lawyers, and/or firefighters, police officers, but for some reason they decided to go the financial services route, which I've often heard too, that once you start that route, it's very hard to get out of it. So once you're in the space, you're kind of stuck. But thanks for that, Bill. Let's shift gears and kind of really start our conversation. And for the listeners, our conversation today is really more or less around technology at the forefront. It's, of course, really no secret that technology is fundamentally changing the way that we lend, the way that we interact with, of course, with our members, and really anymore how we structure our strategies, right? So, Bill, from your perspective, one, what's been the biggest technological advancement or shift that's had a direct impact on your lending strategy today?
Yeah, it's really interesting. So my journey, I mentioned I've been doing this for 25 plus years, and as technology has evolved in all aspects of our lives, but specifically in financial services, I feel like today we've almost become these aggregators or curators of technology platforms. So Advia, just on the consumer lending side, we have roughly 50 different technology systems and partners that we have. And that's just in lending. So, across the entire org, there's 100 plus different technology services and platforms. And I think that's really interesting because if you were to ask a consumer, who they bank with and who provides their technology, for folks that are clients here, they think it's Advia. They don't realize that there's all these partners on the back end, like an Upstart or Jack Henry or Fiserv. And so I think first and foremost, it's understanding that our role has evolved in terms of being a credit union and being able to curate that member experience and how can we reduce friction. So I think to sum it up or to answer your question, I'd say, it's about being very smart and intentional in terms of the products, the systems, and the processes, because the consumer expectation has changed today. And a lot of that is due to the FANG companies: Facebook, Apple, Amazon, Netflix, Google, right? Like there's the expectation of 24/7 availability, low friction, what I want, when I want it, the way I want it delivered. And so expectations are high, and we need to raise our game to that standard. So for us, it's being thoughtful and intentional again about the partners that we choose, and then also trying to integrate those so that it's low friction and a great member experience.
Yeah, let's kind of build off that. Like you already outlined, consumer expectations, of course, have evolved alongside many different innovations. They don't really know that Advia has a lot of stuff in the background. Members want that 24/7 type of access, digital experience, don't want to go into a branch as much as they want to click some buttons, and really simplicity across almost every touch point as it pertains to lending. And then, of course, on deposit side, so on and so forth. But how has Advia responded, one, to these trends? And like, what types of strategies have you implemented and or found most effective in kind of meeting those rising expectations?
Yeah, it's a mix. It's realizing that for as much as technology now integrates all aspects of all our lives, relationships still matter. I just saw yesterday, there's an article about Wells Fargo is kind of leaning back into branch expansion because they realize they need to be present. They need to build the relationships. And there's certain transaction types and certain demographics that still want the face to face, and they want to be walked through the process. They expect that, they need that. And so, if you want to call that high tech, high touch, brick and click, like, however you want to describe it, like that's paramount for us in terms of, well, slick online digital experience is a must, but you also need to have the high touch service as a must as well. So there's so many different ways that can present, in terms of, well, staying mindful of geographic proximity to your members and what's the experience when they go in person, and making sure that it's unique and memorable and differentiates from the competition. And that also has to be present on the digital side as well. So again, expectations are higher than ever, and we need to raise our game to meet those expectations.
On that too, like you think about, there's different personas, there's different age segmentation. Have you really seen an adoption, whether it be by either of those two examples, of like specific tools that your members are using to have the more digital type experience? Are you seeing more of the larger or the older age segmentation kind of shift more to a digital type of an experience? Or is there anything that's really like stood out that's outlined, success in this type of measurement?
Good question, fair question. And I think our data reveals what you would intuitively think in terms of the younger folks are going to figure it out on their own and adopt it more quickly and need less help.
Yeah.
I think what's less intuitive is some of the older demographics. They want to use these services, but they need help understanding it, right? Because they're used to calling their grandchild and having them, walk them through it, or set it up for them when they're visiting their grandkids, but they can't constantly do that. So, we've seen success with having our financial services specialists in our branches, walk folks through establishing mobile banking and doing mobile check deposit for the first time, accessing their credit report through our Savvy Money partnership. And it's almost this light bulb moment of, hey, I can do it on my own. They realize that, but they need to be shown, or they want to be shown the first time. And so that's a key realization for us. And then it's trying to tailor the message to that user and make sure they know that that is available to them, and that increases engagement.
So would you classify that your overall digital engagement has increased, whether age segmentation is a derivative of the maybe not adoption of it? Or have you kind of seen kind of a flat line in adoption of digital versus non-digital?
No, adoption continues to grow, but there's less room for it to grow in the younger demographics. So we're seeing bigger pickups in the older demographics, but only because there was more opportunity there.
So thinking about just technology from a holistic view, I assume everyone listening into this podcast is leveraging technology in some facet as part of their lending strategy, part of their personal life, right? But technology, I don't know, next year, 5 years, 10 years, I don't know what the age gap here is going to continue to evolve. Like you think about what the iPhone is today compared to what it was in 06 and 07. In your view, do you have any sense of what the biggest trends or innovations are on the horizon in the next 5-10 years and how it pertains to the lending space?
That's a deep question. And you know what? I wish I could predict that with accuracy, but we think about that. We talk about that. And I think the trends, and if you look at consumer expectation and demand for low friction experience and digital, and then you also look at just the proliferation of data that's available on us today. I mean, you could go out, Drew, and Google yourself, and you may be surprised how easy it is to find out so much about you within a matter of a few seconds. And so, from the lending side, at what point do we, or how long does it take to get to the point where loan applications are essentially a thing of the past? Because identity verification, income verification, asset verification, like all these things are going to be automated and instant, where it's almost going to be like placing a fast food order through an app, right? I mean, you need a loan. I'm sure there'll be some type of platform where you go in, scan your finger or scan your retina or some voice biometric, and it's going to instantly share your information with a pool of lenders. And within seconds, you'll have a pre-approved loan offer, whether it's for a credit card, auto loan. So we're going to get there. And all these tools separately exist today, but like who's going to pull them together, and how's that going to get pulled together, and how are the lenders going to compete on those platforms? So I can envision that happening within the next 5 years, where it's less and less of a one-to-one relationship, and it's more just consumer goes out, clicks a button, I want a loan, and instantly they have 4, 5, 6 offers, and they really don't have to provide any documents or do any work for that to come to them.
Yeah, that would be amazing. I don't know about retina scan timing. That would be an interesting way of verification. But I mean, you already do it when you go through an airport, so it's not something off the table. Thinking about, though, of technology that is available today that is small in nature from an adoption perspective, thinking of Chat GPT, thinking of Gen AI type of solutions. Do you have any consensus of how these types of AI tools and technology are going to be integrated, not only within lending, but maybe within your organization, your personal space, so on and so forth, to make things more efficient on top of kind of the verification stuff that you outlined in the further advancement of the approval process?
Yeah, short answer is no, we don't. But another topic we're frequently thinking about, talking about, for us today, we're more recently getting into AI decisioning, for all the loans that we do. That's something that Upstart does. It is an expert with, and we appreciate that expertise that we can lean into as we design our strategies around it. But we're getting into that ourselves. But bigger picture, when you start to talk about AI, all the use cases aren't defined yet within our space. And so we're still trying to define and figure out what are those risks, what are those use cases, how can we gain benefits, what's the ROI in terms of focusing effort in particular areas. So, we've got our toes in the shallow end in several different areas, right? So we're starting to do more with our phone systems, and whether it's voice authentication or having AI agents that can provide 24/7 availability via phone for phone banking type tasks of checking balances, seeing if checks have cleared. Like that's low hanging fruit, right? That's a pretty easy one. Or how can we use AI to automate some data entry tasks that relate to indirect loan funding? So there's a lot of small steps that we're taking, but we're going into this eyes wide open in terms of, well, what's the industry going to push towards, move towards, and then how are our regulators going to view all this as well? What are they going to let us continue to do, and what are they not going to let us do?
I'm curious on your thoughts of the member experience of leveraging agents, chatbots, so on and so forth. I know most companies, even outside of the financial services space, have some realm of that today. I know that I use them. I often get angry at them and then want to talk to a person. But you think about the advancement of that. Do you think that there's still going to be a disconnect between a live individual looking to seek answers, questions, get something out of it? Or do you think that the adoption from the actual individual with these bots and agents is going to progress, or any type of risk that you could outline there that you're thinking of?
Yes. So we all have those examples where we've used it, we've become frustrated with it. So the technology is not there today. It's simply not. So it can handle a lot of things well, but sometimes you ask a very basic task and it puts you in this loop where you get stuck and you can't get out of. So I'd say, it gets back to being very intentional and thoughtful and not trying to have a one size fits all solution for your members. So, like using the AI agent for telephone banking example, like present that up front to folks and say, hey, you have this option, but if you prefer not to use it, press this button or say this and it'll put you in the queue, right? Like give people options, and then they're choosing, their path to success and what they want. And I think that's what members want. Again, it's about engagement. So engage them and treat them the way they want to be treated through these paths that we've already set and approved. So that's one simple example, but it's how we're trying to think about the use of AI in terms of gaining efficiencies and improving the experience for those that want to use it, but not forcing everybody down that path because the technology simply is not there yet.
No, I would agree 100% with that. I know there's other companies that don't adopt that same mentality, but we'll leave those companies out for discussion for another day. Well, Bill, thanks. Those are all the questions that I had for you. I think this is a good transition spot. As you know, I always like to close the podcast out with 3 kind of off the wall type of questions, rapid fire. Number one, on the same theme of kind of technology, what's the latest and greatest app or technology gadget that you cannot live without?
Yeah, we've been talking about it today. You brought it up. It's Chat GPT. So I can't claim that it's the latest, but it's so convenient. So I found myself recently like making dinner and looking up recipes for it. We're currently planning one of my kids' high school graduation open houses. And so even coming up with some themes or different things to do there, I've used it there. And then just last week, my wife and I put in pictures of our house and we asked for it to give us some ideas of renovations to like a modern farmhouse look. And it comes back instantly with all these different designs for landscaping and outdoor reno. So it's fun, it's useful, and it's becoming ubiquitous. So everybody needs to get on board.
No, I couldn't agree more. I leverage ChatGPT now more than I ever thought I would, almost to the point where like I don't go to Google search anymore. But I would agree with you. Question number 2, if you could switch jobs with anyone for a day, who would it be and why?
I would say my wife. She is an elementary school teacher. So we work in very different fields. And I think that would be very intriguing and very enlightening to me to walk a day in her shoes, so to speak. So yeah, my wife.
That is a great answer. I give huge kudos, as I have young children, to elementary school teachers and all that they do for our kids. Interesting answer. And then last question, and you can't tell me retina scanning for approval odds on loans, but what is one bold prediction for the future?
One bold prediction. How about 2 bold predictions, Drew? First, I'm going to say our main regulators within banking, FDIC and NCUA, they are going to consolidate within the next 2 years. The next 10 years. 10 years. I can foresee that happening. Especially in light of what we've seen recently in current administration directives. Second, for those that don't know, I'm a big Notre Dame football fan, and they had a great season this past year. I really like the newer head coach. So let's say Notre Dame's going to win the national championship in football within the next 10 years as well. And we'll have to see which of my predictions comes true first.
I like how you threw out the next 10 years, not this coming year, giving yourself some wiggle room there.
Hedge my bet. Yeah.
We'll have to come back in the next decade and see if that happens. It's of course been quite some time, but Bill, this has been such an insightful conversation. Again, thanks so much for sharing your experiences and your perspective. As always, to our listeners, thank you for tuning in. If you enjoyed today's episode, be sure to subscribe and, of course, share with a colleague or friend in the industry. Until next time, keep innovating, stay curious, and thanks again for being part of our conversation.